All right, let's talk SoFi. They just reported their Q3 2025 earnings, and wow, it was a textbook beat and raise. The stock absolutely loved it. So, we're going to break down exactly what happened, the numbers, the strategy behind it all, and what it really means if you're watching this stock. Let's jump right in. The main story here is just crystal clear. SoFi didn't just crawl over the finish line, they sprinted past expectations and then told everyone they're going to run even faster next time. This is exactly the kind of quarter Wall Street lives for. And you can see the market's reaction right here. The stock popped over 5.5% on the day. That's not just retail enthusiasm. A move like that on heavy volume tells you the big money, the institutions, they saw the report and gave it a big thumbs up. So what exactly were the numbers that got everyone so excited? Let's get into the nitty-gritty of this beat. Okay, so take a look at these numbers. The outperformance was just huge. We're talking GAAP EPS coming in at 11 cents when the street was looking for 8. And then revenue, nearly $950 million when the consensus was sitting way back at 889 million. I mean, that's not just a beat, that's a clean sweep. They crushed it on both the top and bottom line. And what's fueling all that revenue? It's member growth, pure and simple. They added a staggering 905,000 new members in just one quarter. That brings the grand total to 12.6 million people. We're talking a 35% jump year over year. That's the kind of growth engine that really justifies a premium price tag. And just to really hammer it home, this wasn't some narrow victory. You look at this table, from earnings to revenue to that massive member growth, it was just strength across the entire board. A really solid, comprehensive performance. A quarter like this doesn't just happen out of nowhere. It's proof that the underlying strategy is not just working, it's absolutely firing on all cylinders. And hey, don't just take my word for it. CEO Anthony Noto said it himself on the earnings call. Their whole one-stop shop vision is hitting its stride. And you know what? The data completely supports what he's saying. They're building a real financial ecosystem here. Now, this is where it gets really interesting. Check out this chart. For the very first time, more than half of their revenue, 56% to be exact, came from their financial services and tech platform. The capital light stuff. This is a massive strategic shift. Moving away from just lending and into these higher margin, fee-based businesses, that is a total game changer for how this company is going to be valued down the road. And this is how they do it. It's their flywheel. They bring someone in, maybe with a student loan or a personal loan, and then bam, they start cross-selling them other stuff. And it's working beautifully. This quarter, 40% of new products were snapped up by people who were already members. That tells you the ecosystem is sticky and people like what they're getting. And these guys are not sitting still. They are constantly innovating. We've got SoFi Pay using blockchain. They're bringing crypto trading back. They've got an AI cash coach. It's all very tech forward. And at the same time, that capital light loan platform they have for partners, it originated 3.4 times billion dollars. That's just a monster number. Look, a great quarter is one thing, but what gets investors really fired up is when a company says, that was great, and the future looks even better. And that's exactly what SoFi did. Management came out and raised their full year guidance pretty significantly. They're now guiding for revenue around $3.54 billion, EBITDA over $1 billion, and EPS of 37 cents. I mean, look at the prior column. Every single one of those is a major leap forward from what they were telling us just a few months ago. So why are they so confident? Well, they spelled it out. First, their loan quality is rock solid. In fact, their charge-offs on personal loans, that's the loans they don't think they'll get paid back on, are at a 2-year low. And second, they're seeing a flight to quality. That means the big money partners, they want to work with the best, most stable platforms, and they're choosing SoFi. That's a massive seal of approval. So they just put a fantastic quarter and a bullish forecast on the board. The question is, where do we go from here? What's our take heading into the next report? To really get what's happening with SoFi, you have to zoom out. Over the last year, the stock is up a mind-boggling 171%. Meanwhile, the financial sector as a whole, basically flat. This tells you SoFi isn't playing the same game as the old-school banks. It's a different kind of animal. So looking forward, here's what we're keeping our eyes on. Can they get people to actually use these new AI and crypto products? Can they keep up the crazy growth in that capital-light loan business? What happens to their margins if and when interest rates start to fall? And finally, can they sign up more big-name partners for their tech platform, like they did with Southwest? These are the key questions. So after digging through everything, our official rating on SoFi is outperform. The execution is there, the financial model is clearly accelerating, and they have so many different ways to grow. We think it's set to continue beating the market. And that brings us to the big trade idea. Here it is. The market still looks at SoFi and thinks, bank. A fancy bank, sure, but a bank. But we just saw the proof. Their revenue is shifting hard toward a high-margin, capital-light tech services. Sooner or later, the market is going to be forced to stop valuing it like a bank and start valuing it like the tech platform it's actually becoming. That re-rating, that's where the real money is made. And of course, as always, please remember that this is not financial advice. You should always do your own homework before making any investment decisions.